Housing supply indicators have been flashing warning signs across the board lately, which has put heavy upward pressure on prices. What are the trends going forward, and what will that mean for home prices in the future? Today's episode is part 2 in our series, When is the housing market going to crash? Which is the million-dollar question these days, and depending on your market, that might be literal. Let's get into it. Welcome to part 2 of our series on the question, when is the housing market going to crash? In this video, we're going to go deeper into the subject, focusing on the supply side of the market. In part 1, we introduced the topic and gave a high-level overview of what's going on with prices. A question this serious deserves more than a quick 10-minute video where we just go over some news headlines and rattle off an opinion. On this channel, you're going to get a comprehensive 5-part series from a real estate agent who's actually an economist. Now, there are a lot of ways at looking at housing supply, but what we're immediately interested in is the supply on the market and what the future looks like for that supply, so we can say something meaningful about what to expect from prices. You don't have to look very far to see a news article talking about the low supply of housing across the nation and how it's pushing up prices. But we're going to go a bit deeper into the data for ourselves and see just what's actually going on. A lot of these news stories are written by journalists that don't dig into the data for themselves and for the most part rely on other people's analysis for their story. You're going to get the real deal here. We don't need to rely on anyone else's analysis. We do the work for ourselves. Now, when we're talking about market supply, we need to look at how many houses are for sale in the market, but also how fast sales are happening. The pace of sales matters. You could have what seems like a large supply of homes on the market, but if they're selling fast, it may not be much at all. This is most commonly captured in a metric called the month supply of homes. For sales of existing homes, the current month supply as of April 2021 was 2.3 on a seasonally adjusted basis, based on our analysis of housing statistics from the National Association of Realtors. This means that at the current pace of sales, the number of homes on the market would be exhausted in 2.3 months if there was no new supply that came to market. You can see from the graph here that the level of month supply we have in the nation overall is at the lowest level in nearly 20 years. When we look at the month supply of new homes, we see a similar picture. As of April, there was a 4.4 month supply for newly constructed homes on a seasonally adjusted basis, which is also at a historically low level. These low levels of homes for sale compared to the pace of sales is a major contributor to the strong price growth we're seeing in markets across the nation. Now, it's important to remember that these are national level statistics that the National Association of Realtors and the U.S. Census Bureau have put together for us. But there really is just too much variation across local markets throughout the country that these national level statistics just can't capture. And if we want to have a good idea of the direction of the housing market at a national level, we need to know what's going on under the surface of these high-level statistics. We recently published a video on the top 20 real estate markets to watch when you're considering where things are going nationally. You can check out that video for more detailed explanation on how we put together that list and which markets are included. For our purposes here, we've constructed a series of indicators for that group of 20 to get a more complete picture of what's driving these national numbers. In terms of market supply, the top 20 market group had a 1.1 month supply on a seasonally adjusted basis for all properties as of April 2021, and that's based on data from Redfin, a national real estate brokerage. This is significantly lower than even the tight supply in the national numbers. At this point, homes in these markets are being sold almost as fast as they're being listed. What is happening in these top markets is even more intense than what we see in the national numbers, and really highlights why we are seeing soaring prices in so many areas. That's why we're looking at these markets specifically as a leading indicator of where things could go nationally. And so far, they're pointing to a tight supply in the near term. In future episodes, we'll be doing a deep dive inside some of these individual markets for some case studies. Make sure you're subscribed and hit that notification bell down below so you'll know right away when our next video comes out on the subject. And if you like what you're seeing so far, please give this video a thumbs up to support the channel. Now, when we're trying to assess the future dynamics for market supply, it's important to differentiate between existing homes and new homes. Although existing homes make up a much larger share of the overall market, as you can see in this graph here, it's new homes that will truly add to the overall housing supply. For existing sales, there's typically a buy for every sell, and it's a metric of turnover for the large part. Think about it. If a homeowner sells their home, they usually have to buy another home somewhere else. They may be downsizing their home, or upsizing, or just moving to a different location. Now, there are exceptions to this, of course, as some people may have more than one residence that they might want to sell, and they may be cashing in on investment property, or someone may decide they just want to rent instead of own. But typically, if someone is selling the home, they'll buy another at some point, absent some significant events taking place. New homes, on the other hand, are what really add to the housing supply. They're needed for population growth. The U.S. population may be growing slowly, but it's still growing, and we have to continually build more housing to support new population. Otherwise, we'll have some pretty serious overcrowding issues. So let's look at where we are in new home construction to see what's in store for new supply coming online soon. The U.S. Census Bureau gives us some good data on new home construction throughout the different stages of construction. In this graph here, we have permits authorized for new homes. We've definitely seen a strong uptick in new permits since last year as builders have responded to the strong demand we've seen. And as of April 2021, permits are up by 58.4% year over year. Looking at our top 20 markets, we see even stronger growth, with permits up 79% year over year. We're seeing a similar trend in home starts nationwide, which are up by 67.3% over the same time period. New housing completions have also had a strong uptrend, but have seen noticeably lower growth in permits and starts, and were just 21.7% higher year over year as of April. Now, when we put this alongside growth for permits and starts, you can see another problem we're facing. A lot of homes that were permitted and started aren't being completed. Many of you, I'm sure, have heard stories of the difficulties builders are facing with construction supply shortages that have driven up prices. Lumber is a prime example of this. And it's been estimated that the recent surge in lumber prices has added up to $36,000 to the average home price. Home builders are faced with some tough decisions. Not only are materials higher in cost, but are also scarcer. There are reports of some builders laying a concrete foundation, which would count as a home start, but are delaying completions to manage their own supply chains. While this is seen as a temporary supply bottleneck at this time, it's only putting more constraints on market supply when it's already beyond tight by historical standards. So from the data we're seeing, new home construction is ongoing, but's constrained and can't keep up with demand. For existing homes, we see continued listings each month, but the demand is so intense that homes are sold almost in the same month they're listed in these top markets. If we were to answer the question, when is the housing market going to crash using only these supply statistics, I would say not for a very long time. Supply is tight and we don't have any indication that it's going to get better anytime soon. which is supporting the dramatic price increases that we're seeing right now. But supply is not the only side of it. In the next part of our series, we're going to be switching gears and moving our research into the demand side of the equation. If demand were to slow down significantly, then we would see market inventories rise, which will put downward pressure on prices. Another consideration is how the government has intervened in the markets with their policies over the last year by preventing rental evictions and foreclosures through mortgage forbearance, which has held back some homes from hitting the market and adding to supply inventory that ordinarily would have come onto the market during an economic downturn as in the past. We will be looking at that more closely in part 4 of our series. In the final part of this series, we'll bring it all together to answer the question, when is the housing market going to crash? If you have additional questions on housing market supply, or just if something wasn't clear in this presentation, please leave it in the comment section below so we can address that. And again, please leave a thumbs up for this video to support the channel, and I hope you will consider subscribing if you haven't already, and make sure to hit that notification bell down below so you'll see when our next video comes out on this subject or any of the other subjects we cover. I'll see you in the next video.